Let's continue to go to work, beloved. Now, let's look at how we can monetize the energy sector in a most clever way, a way that the uber wealthy are doing very quietly. I'm talking about buying through the refiners. Now, I'm about to give you information pertaining to 3 different refiners, all of which are paying dividends of more than 4%. 3% is the threshold to compete with inflation. Now, refiners offer attractive yields without the volatility of oil transportation services. Now, as crude oil prices continue to live in a range-bound existence between $40 to $60, albeit at the lower end of the range these days, pressure exists across the oil and gas industry. Refiners, though, have fared better than other companies further up the value chain. You see, the Oil and Gas Refining and Marketing Group, as classified is altogether as a group classified, is down just 3% year to date versus oil-related services and equipment, which is down 27%. Oil and gas transportation services, believe it or not, is now up 5% and recovering from an over 15% drop in early June. Now, refiners offer attractive yields without the volatility of transportation services, where much sentiment is intertwined with political processes. So at this particular time, I'd like to submit to you 3 well-run companies that pay you well to sit and wait for a rebound in crude prices. But don't go into this with a situation where you think crude oil prices have to move to the upside dramatically for these positions to continue to pay you. No, that's not the case. These positions will still be stable and won't go into the red too much if crude oil prices continue to slide back down to the downside. Take copious notes, please. First position I want to give you is Valero Energy Corporation, symbol VLO. Valero, symbol VLO. Dividend yield of 4.1%. Now, Valero Energy Corporation is the 2nd largest domestic refiner by market cap, second only to Phillips 66. And VLO produces a higher dividend yield at a more favorable price to earnings multiple and price to book. Now, Valero has also outperformed Phillips 66 significantly over the challenging past year. In fact, VLO stock is up 32% versus only 11% for Phillips 66 stock. However, during a 5-year period of lower than average crude oil prices, both have done reasonably yet well. Still, Valero, once again that symbol, VLO, outperformed the larger refiner with capital gains of 165% versus only 140% for Phillips 66. Now, a 4.1% dividend for a consistent producer during a time when gasoline margins should be improving due to seasonal patterns and export demand isn't a bad deal at all, beloved family members and listeners alike. Management does expect, quote, medium and heavy sour crude oil discounts are expected to remain weaker than their 5-year averages as supplies of sour crude oils available in the market continue to decline, end quote. But against this backdrop, ethanol margins should improve. Importantly, VLO's average refining EBITDA per barrel throughout is top-notch and ahead of its peers. For the last full fiscal year, Valero did $7.09 per barrel compared to $6.23 per barrel for its peers. Valero family, symbol VLO, a very clever way to get P.A.I.D from the energy sector. Next company I want to give you, talking about high-yielding refiners here, is Holly Frontier Corp, symbol HFC. Holly Frontier Corp, symbol HFC, has a dividend yield of 4.6%. Now, Holly Frontier Corp is interesting because of its exposure specialty, and that specialty is in lubricants. So it's more than just a refiner. On the refining side, it has five refiners spread across the mid-continent, Southwest, and Rockies, with capacities of 457,000 barrels per day. Now, there are opportunities to reduce operating expenses that will squeeze some additional value from existing refineries. Now, although it's a smaller player in the refining business, HFC ranks as the fourth largest North American base oil producer with its lubricant production capacity of 28,000 barrels per day. Now, this lubricant division helps diversify revenues, giving a challenging crude environment. The acquisition of Petro Lubricants Canada will add 15,600 barrels per day in lubricants production capacity, which propelled HFC from the 9th spot by barrels per day to the 4th spot. The result is a force to be reckoned with that will become leaner and more efficient. It will also reap the benefits of revenue and cost synergies. Now, management is quick to note that lubricant and lubricant additive companies trade at premium earnings and EBITDA multiples relative to refiners. Family members, you gotta go ahead and take a look at that Holly Frontier Corp, symbol HFC. You're talking about a refiner that also gives you lubricant income. The third company I want to give you, as we talk about high-yielding refiners to get you P.A.I.D, is PBF Energy Inc. PBF Energy Inc. Trading under the symbol PBF. Has a dividend yield of 5.4%. And by the way, just to refresh your memory, that dividend yield on the Holly Frontier Corp was 4.6%. Now, PBF, with a dividend yield of 5.4%, is smaller than the other two positions I just gave you at $2.5 billion market cap. It has 5 refineries with 884,000 barrels per day of processing capacity. Compare that to Valero's 3.1 billion barrels per day capacity. But you see, PBF makes up for this in diversification with West Coast exposure via its Torrance refinery. Now, Torrance is undergoing a bit of a turnaround. Currently, it has 155,000 barrels throughout capacity. And PBF is targeting $50 million in operating cost reductions over the next 2 years, which will enhance overall margins. Now, PBF also has a strategic relationships with PBF Logistics. Now, PBF indirectly owns 100% of the general partner, okay? And as a result of that, it receives all incentive distribution rights, or IDRs. This provides PBF with a source of stable cash flows without any direct commodity exposure. That's super, super smart, super slick. Excuse the pun. And this ultimately is a different source of capital to grow its business. Family members, you just received 3 refineries that the uber wealthy are getting paid from consistently. We're talking about that PBF Energy Inc., symbol PBF, Holly Frontier Corp., symbol HFC, and Valero, symbol VLO. Dividend option trifecta effect strategy in full effect, Wealth Astute family members. 3-time payoff off each one of these positions. So you're looking at conceivably 9 paydays